The biggest thing I would say that I was surprised by, but also incredibly happy about, was there was no threats to this industry, to this profession. It's the first time in over 40 years that we didn't see attack on this business. First time in 40 years that they did not utilize this profession, this business as a pay for. And that's due to the incredible work of Finseca, our partnership with our carrier partners like Penn Mutual, like the other trades out there, the ACLI, NAFA, but also because I think finally Congress is realizing they didn't need this as a pay for.
Life Matters, a Penn Mutual podcast for financial professionals, bringing you life insurance insights from advanced sales experts and life insurance specialists. Grow a stronger practice today.
Welcome to Life Matters, a Penn Mutual podcast. I'm your host, Bill Bell, Vice President of Advanced Sales with Penn Mutual, and I am so pleased that you chose to join us here today. Now, I talked a lot about tax reform on this podcast. In fact, earlier this year, we had Jen Fox, VP of Federal Affairs, on the show to talk about potential tax reform, what was going to happen. Well, it happened. On July 4th, the president signed officially what's known as H.R. 1, unofficially is known as the One Big Beautiful Bill Act, even more unofficially known as the Triple B, which we call it here at Penn Mutual for short. Well, that is the bill that is basically tax reform for the foreseeable future. It's a huge bill. It's got a lot of spending, a lot of tax provisions in it. So we thought it would be a great idea to invite Jen back to talk about what happened, why the bill looks like it does, and what some of the important provisions are, and most importantly, how it affects life insurance and life insurance planning going forward. So let's get to that interview with Jen. But first, I have a very exciting announcement. Did you know that your clients can sign up for paperless delivery of Penn Mutual documents? That's right, paperless delivery of Penn Mutual documents. They'll receive instant notification via email when their documents are ready to view. It's quick, it's easy, and it's secure to go green. In fact, I'm a Penn Mutual policyholder. I did this myself. It only took a few seconds. I'm not the most technologically advanced person on the face of the earth, and even I was able to figure it out. And most importantly, I'm really only thinking of the well-being of my mail person. In fact, a couple of weeks ago, my mail person pulled me aside and said, Bill, you stopped getting paper statements of your Penn Mutual stuff. I really appreciate it because I'm already carrying so much weight to your house every day with the various clothing catalogs, specifically Johnny Waz catalogs that your wife gets. Just that one less piece of paper makes all the difference for me. You could do the same for your clients' mail people out there by going paperless. Again, it's really easy to do. Just have your clients go over to myaccount.pennmutual.com. Again, that's myaccount.pennmutual.com to get started and enroll today. It just takes a minute. Just make sure to look for the delivery preferences link in their account portal. So with that, let's get to the interview I did with Jen. For the second time this year, it is my pleasure to welcome Jen Fox from Finseca. Jen, welcome back to Life Matters, a Penn Mutual podcast. So happy to see you here again.
Thanks for inviting me back. People usually don't ask me more than once.
Well, it's doubly exciting because you are our first ever repeat guest on this podcast. So are you feeling honored?
Oh my goodness. I'm super honored. Do I get a trophy, an award? What does it look like, Bill?
I will buy you a beverage next time I see you. How's that?
And an autograph. I'd prefer a Bill Bell autograph, I think.
Yeah, you don't want that. It's illegible. You know what they say about doctors and lawyers and their handwriting, right? It's bad. All right, so let's dive into it. Obviously, we're here to talk to you primarily about H.R. 1, the tax reform bill. We call it the Triple B for short. Last time you were here, you thought that there was a likelihood that they were going to try to do a two-bill approach, two reconciliation bills here in 2025. Obviously, that's not the approach that they wound up taking from a tax reform standpoint. Why did that change, and what did that ultimately mean for our listeners?
Again, Bill, thank you. And to the Penn Mutual community, thanks for having me back. I appreciate it, even after that maybe wrong prediction, but
That's
all
okay.
the same. As Speaker Johnson and Leader Thune and President Trump were looking at their cards, they realized there's not a lot of wiggle room. And the momentum was there to say, let's throw all that we have onto this one big, beautiful bill. And that way there's something in there for everyone. And even if there's things in there that people don't like, there's something they could find. And the momentum behind one big bill allows them to get a lot more stuff in there. The other thing I would say is, as we saw from this, is there's some hurt feelings coming off of one bill. And if they went this approach and maybe made it smaller, it would have been much harder to get that second bill passed and across the finish line.
Yeah, it seemed like there were some upset people. And I think some of what upset some people was just how fast the process was, which leads me actually to my next question here is, why the rush? Why did they need to get this done when they did? I know initially people thought that they needed to get it done because they needed to push out the debt ceiling, but that really wasn't the case. That wasn't going to become an issue until probably mid-August, it's looking like. And the fact that they did this so quickly actually made for some pretty good television. I remember on Wednesday the 2nd, Mike Johnson was on TV at 1 o'clock in the morning, 1:30 in the morning, basically saying he can't find some of his members to vote on this procedural act that they needed to get done to actually vote on the formal act on the 3rd. So why the rush? Why do they need to get it done to get it signed by July 4th?
Well, a couple of things. First, Bill, now I know that you stay up late night watching C-SPAN because you're on the West Coast. So when we have our next bill, I will ask you to take the overnight shift for me so I don't have to stay up late watching C-SPAN. So thank you for letting me know.
Does that job pay well?
Yes, in alcoholic beverages when I see you. So
okay, great. We might get disheveled notes, but I'll take that deal.
Why the rush? I think the first thing was around the debt ceiling. That's why they pushed this process so quickly in the beginning. Although August 15th or mid-August is a number that ended up coming out, when they first started this process, it wasn't exactly clear when the date would have been. Second piece around that is, once you open Pandora's box, it's out there. And the longer these things sit out there, the longer there's time for people to comment, to find changes, to find things they want differently. And that's why what we saw even just over the last few weeks was, once the Senate pulled through on their process, the House came back immediately. There was no time in between. There was no daylight because we had to keep this thing moving in order for it to get across the finish line. The longer these things sit out there, the more likelihood there is for people to poke holes in them. And we see that all the time. The last piece I would say, too, as sort of a dynamic, was there's a lot of other things happening in the political world right now. We had tariffs. July 9th is the date originally that President Trump had said he was watching. There's also some retirements. Folks were saying they were going to leave Washington and retire out of Congress. Mark Green is one of those people, whether this bill was done or not, by the end of the summer. And so there was some sort of additional political counting, and Congress works no better than when there is a deadline. And the deadline for them in this case was that July 4th recess.
All right. Any surprises in the bill? Are there things in there that you were somewhat surprised by, things left out you were surprised by? In Jen Fox's world, what did the bill live up to its expectations?
I would say I was surprised by a few different things. I think the first was Speaker Johnson made a lot of promises along the way, right? Along this whole pathway, he kept telling his members that, oh, and the next step will fix this thing, and the next step will fix this thing. And in the end, the next step was voting for it. And those things weren't exactly fixed, or maybe they were. You know, some of the changes to Medicaid, some of the cuts that weren't made that people really wanted. How all of that ended up shaking out, I guess I was a bit surprised by, given the politics that were sort of pushing and pulling on both sides. The biggest thing I would say that I was surprised by, but also incredibly happy about, was there was no threats to this industry, to this profession. It's the first time in over 40 years that we didn't see attack on this business. First time in 40 years that they did not utilize this profession, this business, as a pay for. And that's due to the incredible work of Finseca, our partnership with our carrier partners like Penn Mutual, like the other trades out there, the ACLI, NEFA, but also because I think finally Congress is realizing they didn't need this as a pay for. They could look at other things.
That really dovetails great into my next question. And you've already kind of hit on the piece that's most important. But I think the industry as a whole very much considers HR1 a win, or the triple B a win. Is it really just because of the fact that we weren't used as a pay for it for the first time in 4 decades? Is it because of the provisions themselves? What's the official word from Finseca in regards to why we should be running a victory lap right now?
I think the biggest thing, Bill, is as you think about what we measure ourselves against, is we have a specific focus. This bill was 1,000 pages long. There's a lot in there, and there's a lot of probably things that could be concerning to any one person at any one time. But as we think about what we were measuring ourselves against, what our core priorities are, this is absolutely a win for this profession and for this industry. No new taxes on this profession for over 40 years is incredible, but you think about what that number looks like. Ken Keyes, who is now the Assistant Secretary of Tax over at Treasury, said what's been levied on this business is almost $500 billion over the last 20 or so years. So for that not to happen, incredible. Some of the other provisions, opportunities to make them permanent and sustainable, key and crucial, which I know we'll get into, but also opportunities for us to look at this a little bit differently, right? We'll talk probably a bit about the Trump accounts, but getting people to save earlier, sooner, and just thinking about financial advice, there's a lot of opportunity out there that we're still uncovering in this bill.
All right, we're on here to talk about tax reform, and I think that that's probably what a majority of our listeners are interested in. We aren't going to spend a ton of time on any of these individual provisions, but there are some people that are listening that don't follow this stuff as closely as you and I do. So we want to make sure that we provide kind of that baseline education to everybody in regards to what the rules are going to be going forward. So I'm going to throw out some provisions. You tell me where we landed up, and then our listeners can determine whether or not they're happy with those things or not. So let's start with the estate tax. Where do we wind up at?
So it's 15 million per person permanent and indexed for inflation. So 30 million per couple.
So not really a big departure from where we are right now. We're at 13.99 right now, 15 starting next year. So I don't think that that's a big difference. I know that there were some people that were pretty upset that the number got to that point and that maybe the industry wasn't fighting hard enough to try to lower that. But the reality is that was never going to happen. And the other side of the coin is it could have been a full repeal. So I think that 15 million is probably as good of a place as any that we could have wound up at.
And I think, Bill, the thing that I would always say is we are not here to fight for more taxes for your clients, right? What we're here to fight for is sustainability and permanency. And what I know, at least from what I've learned from working in this business for 7 years, is having a number that you can point towards and having that be permanent. It's going to make the conversations and the planning so much easier, whether the family is near that number or they're not. But by having things constantly switch around, it being a political football is not helpful to anybody's planning. And having it being permanent at a number that you can work towards, to me, is better than repeal or to the number going down for a year that might then sunset or something to that effect.
When we say the word permanent, I'm going to do it once here. Permanent, for those watching on YouTube, for those of you that are just listening, I used air quotes. Permanent, when it comes to tax law, just means that it's in place until it is changed at some points in the future. There's not a sunset that's written into the bill. So it's permanent until potentially 4 years from now, where it could be changed again. But the law as written doesn't have an expiration date associated with it. So that's where the permanent element comes into play.
Permanent means employed for me.
I like it. All right. Last time you were on, you guaranteed that the 199A deduction was going to survive. Look at that. So you're 1 for 2 as far as predictions go that we've brought up here. So where do we wind up with that?
So it's at 20% permanent. Kept some of the workarounds for those that live in states like New York and California that might have high state and local taxes. The thing I would flag is there was a risk that some of those workarounds were actually going to be closed, as well as maybe some of the folks who have different types of income, qualified business income, and the income that is not SSTB, that some of those lines were about to be blurred. But luckily, the Senate fixed that. Unfortunately for us, the House did have 23% in their original bill, but it did come down to 20. But what I always joke, beggars can't be choosers, and we're happy with 20% permanent forever.
Yeah, I don't think anybody can really complain about that. All right, personal income tax brackets. I think brackets are going to stay the same with indexing for inflation in regards to the thresholds on a permanent basis. Do I have that correct?
Yep, exactly right. As well, the standard deduction too, permanently up to 15,000 and a little change, indexed again for inflation after 2025.
When we were in Washington a couple weeks ago, and we'll go into a little more detail on that, you and I actually were on Capitol Hill and had a little discussion about the SALT deduction because I live in California. The SALT deduction is very important to me. And there was a discussion at that point of whether it was going to be a $40,000 deduction or a $30,000 deduction, and whether or not our friends in New York were going to get rolled and be forced to choose that $30,000 deduction. Where did we wind up? Did our friends in New York wind up getting rolled after all?
So I'm going to say no, but. So we ended up at 40,000 for any year after 2025. However, that SALT limitation goes back down to 10,000 after 2029. This is permanent. So just as a reminder, now no offense to my New York and my California Republicans who work their tails off to get this deal, but if tax cuts and jobs would have expired, it would have went back to unlimited. And this provision, in order to get that 40,000 for the next couple of years, they did get locked in at that 10K after the fact. So it's a win, but.
All right, that's fair. I know my congresswoman worked very hard on that. I spent an inordinate amount of time talking to one of her legislative aides about it when I was in on the Hill a couple of weeks ago. I know that was very important to them. Just a clarification, is it for tax years starting 2025 where you can deduct the 40,000, or is it starting in 2026?
2025.
All right, so I can deduct 40,000 this year, assuming I don't hit the phase out, correct?
That's it. So the phase
Man.
out starts at 500,000.
All right, terrific. I'm going to go out and spend that money immediately. All right. Now, the last thing, it was very nebulous when we talked about it in January. The president ran on no tax on tips, no tax on overtime, no tax on Social Security. Seems like there's elements in the bill that reduce those things, but I think it probably would be a misnomer to say no tax on tips, no tax on overtime, no tax on Social Security. Would you agree with me on that?
Beauty's in the eye of the beholder, Bill, is what I would say. I think President Trump is able to hang his hat and say that he got these things done. But when you dig into the details, it's a little bit different how they're actually going to come into play. Do you want to walk through what those look like?
Yes, please.
So the first, let's talk about no tax on tips. Now, unfortunately, for all of my friends who work in life insurance, I know that the joke comes next is how do I get paid in tips? And unfortunately, we are caught out. We're not in one of those trades that is actually able to get no tax on tips. So even if you've tried to rework your business model, unfortunately, that is not going to work out for us this time. But it's a temporary deduction up to $25,000. And again, the occupations that are included, some of them are listed out, but also the Secretary of the Treasury is going to have to do a bit more work specifying what additional occupations are included.
And there is an income phase out on that, correct?
Correct. Yep. And again, temporary, not permanent. Overtime, same deal, temporary deduction up to about 13,000. It's 12,500 for a single file or 25,000 for joint return. Phase out begins at 150K and 300,000 in the case of a joint return.
And then Social Security. I think this is the one that confuses the most people.
So Social Security, I think, actually ended up in a pretty good place. So fun fact that folks don't know this, I don't know if it's actually fun, but for someone who lives in Washington and works in Washington, it is kind of fun. If you are working within reconciliation, you cannot touch Social Security. You can't do anything with Social Security specific. So Congress had to get a little bit creative in order to give President Trump what he wanted. So they created a new tax deduction for people over the age of 65. It's temporary. It's $6,000 per person. So a married couple, that's a pretty nice deduction for them. Again, there's income phase outs as well. And it does sunset in the year 2029.
Okay, so sounds like they reduced the burden for people receiving all three of those types of incomes. I think a full elimination of tax on those things would be disingenuous to say, but I do think that there is definitely a lessening of the effect of the taxes on those things. And I think that, as you said, the president could definitely hang his hat on those going forward. Although I think that anybody that's listening here has to be careful in regards to the language that they use in regards to those types of income and whether it's taxable or not.
Absolutely. And our friends at the IRS and our friends at the Treasury are busy working on additional guidance and regulations to how this actually all gets implemented. So, my accountant friends that are listening, get ready. You'll be busy fairly soon.
I'm going to bring up a horrifying prospect here. Is there a possibility for another reconciliation bill here before the end of 2025 and then another one in 2026? I saw the speaker on TV saying that he's going to pursue that. Is there that real possibility? And does that include additional tax reform?
Definitely possibility. Yes, I'm horrified if you're one for our listeners at home. I'm tired, but we'll take the summer off. And that's what my belief is, that they are going to let things air out over the next month or so. Congress goes home for August, and then September, we're going to restart this. Now, the thing I would ask you to keep in mind is there's a little thing called government funding, and that runs out on September 30th. You'll remember back in March when we had this issue, the Democrats had to come to the table and make a decision in the Senate to help get this across the finish line and make sure the government didn't shut down. And Senator Schumer got a ton of slack for doing that, for helping to keep the government open, no matter what your politics are. It was an unpopular decision within his own party, even if you think it was the right one or the wrong one, again, depending on your politics. Now, the question becomes, Bill, is what's he going to do here in September? Are they going to do some sort of continuing resolution? There's no way they get the appropriations process done. So as you layer that on top of getting NDAA and some of the other provisions and bills they have to get across the finish line at a certain time period, they can make the schedule for a second reconciliation bill challenging. However, it's not going to be as big and as beautiful as the Triple B or HR1 that we just saw. So it's possible there's some sort of skinny reconciliation bill that we see get done sometime this year.
Oh, I just had a flashback when you used the word skinny in regards to a bill. Let's hope that doesn't happen again. All right. Last thing in regards to kind of what's going on in Washington right now. Anything else that the industry should be on the lookout for, either from a legislative or regulatory perspective from a federal standpoint?
I think, Bill, just maybe harkening back to the HR1 for a quick second, some of the things that we didn't know that existed are now in existence. Trump accounts. These are accounts that are being started for newborns starting actually this year. So if you had a child in January, you can actually go back and open a Trump account. It's $1,000. Government's actually going to seed that for the first few years. And then you can gift $5,000. Now, I know in advanced planning and wealth transfer, $5,000 isn't a ton, but it's still an opportunity, again, to help get folks saving earlier, sooner, and also help with the wealth transfer process. So we'll see how those regulations are written and if folks are actually going to take advantage of those. The other one in the 529 space, additional expenses are available, can be utilized, be paid for by a 529 account. So again, these are just ancillary that I think things we weren't exactly tracking. What else is going to happen this year is a real question. Again, I just laid out all the things Congress has to get done, and not to mention all of the other things that are happening in the world around foreign affairs, tariffs, unfortunate floods that we just saw in Texas. So there's a lot happening in this country, and hurricane season is just about to start or has already started. And we'll see that rear its ugly head and what natural disasters will come to this country. But there's hope for bipartisan work around retirement. Now, I'm not going to tell you, I don't want to get kicked off this podcast, that that's definitely going to happen. But Chairman Smith was very specific around leaving retirement out of this bill. There is nothing really related to retirement in HR1, and he did that on purpose because it's always been a bipartisan bastion left here in Washington, a ray of sunshine around retirement and bipartisanship. So there's potential there to see something happen, and that's where Finseca, of course, will be engaged and involved. But I'm hopeful maybe in this Congress we'll see it. I'm not sure if the bad blood will be dried up by the end of this year.
We're not talking about like a secure 3.0, right? We're talking about maybe something a little more scaled down.
Maybe. It's possible. There's also a bunch of deadlines that are happening this year around healthcare taxes. So there will need to be an extension package there. So maybe they throw some retirement provisions in there. Of course, we were talking about Secure 3.0 before this Congress started, but I'm not sure the juice is there yet.
All right, let's change gears altogether here. I've mentioned a couple of times already that you and I saw each other a couple of weeks ago, and that was at the Finseca Advanced Markets Conference in Washington, D.C. It was a great event. Seemed like the biggest crowd in a post-COVID environment. A lot of people, a lot of great content. What were some of your key takeaways from that particular event?
Yeah, thanks, Bill. Thanks for being there. We appreciate it. Again, thanks to the partnership we have with Penn Mutual. We had such a great crew in town. The timing couldn't have been better. If you think about where we were, the House had just finished their piece of the pie, and it was over, the reconciliation bill was over in the Senate, and they were working on their details. So what a great time for us to have about 400 people head up to Capitol Hill to sing the story of this profession and this industry. If that wasn't the highlight for me, then certainly as a recovering New Yorker who now lives in Washington, but I married a Patriots fan, seeing Derek Jeter on stage, like, he was pretty cool. I didn't think he was going to be that cool. Hopefully he listens to this podcast and he hears me say that. That was awesome, as well as our Washington update. That was a pretty awesome group that we had. We had Josh Holmes, who hosts the Ruthless podcast. We had Jeff Miller. We had Melissa Bova, and just an opportunity to really talk through what we thought was upcoming, the impact to the states. And then, unfortunately, Bill, we're about 400 days away from the midterm elections, so we got to talk about that too.
Your session was great. I actually watched it from backstage because I was on right after you, but it was certainly entertaining to see you and Josh and the group up on stage talking about what's going on in Washington. So great event. Terrific job by the Finseca people. Always a real highlight to the calendar. In fact, I think that we already have calendar dates for the 2026 event. I'm not going to put you on the spot, but if you go to finseca.org, it is finseca.org, right?
Yep. Yeah, exactly right.
You can find the dates for the 2026 Advanced Markets Conference. I will definitely be there. Please, if you haven't gone to one, consider doing so going forward. It is a great event. All right, another thing that happened this year. I know that you don't like to talk about yourself, but I'm going to do it for you here. You garnered quite the honor this year. And I'm not just talking about the fact that you were a two-time guest here on Life Matters, a Penn Mutual podcast. You were named the Association Trends and CEOs Update Association Lobbyist of the Year. First of all, congratulations, an amazing honor. And what does that really mean to you in regards to how you've been able to get yourself out there and advocate for our industry?
Well, it means nothing to me because I got invited back to the Life Matters podcast twice, and that just goes right above my anything else on my resume. So know that, Bill. But thank you.
That's
Thanks
fair.
for calling that out.
Yeah, very fair.
One of the qualifications or one of the criteria that the group looked at when they were analyzing different lobbyists was the member engagement. And that was my highest scoring area. And for me, that means the world to me because, as you know, I am so passionate about the work that Finseca members do. It's truly an honor and a pleasure to serve this profession, but to learn something new every single day is not something I think a lot of folks can say about the job they've been in for 7 years or even probably 5 years. But every single day I get to learn something new. And this is a noble profession, solving crises across the country where people need financial security, they need protection. And so it's an honor. And I'm appreciative to be recognized for it. But more so, it's not just about me, it's about the whole Finseca team and our entire membership.
Well, on behalf of the entire life insurance community, I have to say we appreciate all your efforts. You do an amazing job. Please keep it up. I've worked with a number of the lobbyists at Finseca in my time in the life insurance industry. You are by far my favorite. So thank you very much for all that you do.
Thank you. I appreciate that.
All right. A couple of questions just to round us out here. Now that the Triple B is over, how many weeks of vacation is Caden going to give you and where are you going to go?
Unfortunately, I have no vacation right now. While I know there was a lot of hope and faith that this bill was going to get done by July 4th, I wasn't as personally convinced. So I have a full summer of work to get done and meetings and events. I was actually on Capitol Hill today, but I've already booked my Christmas vacation. I am looking forward to going to the Grand Caymans and not speaking to one person, even my husband, while I'm there.
That sounds spectacular. Now, are you more of a pool person or a beach person when you go to something like the Grand Caymans?
Definitely a pool person because you're closer to the bar.
I agree. And you don't have salt, you don't have sand. When I go to Hawaii, I barely ever touch the ocean over there. I look at it plenty, but I will sit by the pool I will enjoy a beverage and just enjoy the nice weather and so forth. So you are definitely deserving of a nice vacation here. Unfortunately, you have to wait a few months, but doesn't sound like too far away. All right. Last thing, I know probably some of our listeners are saying, this Finseca place sounds awesome. They are fighting so hard for our industry. How can those listeners become more involved going forward?
Join us at a Finseca meeting. Join us at the Advanced Markets Conference next May, or go on our website, finseca.org. We have tons of upcoming content. That is what I'm spending this summer doing, is helping us to create content, sales strategies, ways to think about tax planning differently now that we have this HR1 finalized. The other thing I'm certainly working on, Bill, as someone who does not have a child, is I'm working to get pets considered dependents. So that way, when they bark in the background, at least we'll get a tax cut for them.
That would be good because I've got 4 of them. So, I mean, that would be a major deduction for me if I could write them off. I mean, in some ways, they are more expensive than my kids were at that age. So my kids are adults now. So I don't necessarily have to worry about the same level of expenses with them. But the dogs, they just seem to be so needy all the time. All right, Jen, thanks again for joining us for a second time this year on Life Matters, a Penn Mutual podcast. Really great information. Thank you again for everything that you do. Really excited to kind of see where we wind up with the BBB and tax reform going forward. I'm hoping reconciliation, if it does happen again later this year, is not the same level of circus it was this time around. But if it is, we're going to probably have you back on a third time, if not here in 2025 and 2026. So look forward to that.
Bill, thanks again for the partnership. We appreciate it.
Thank you for watching. If you enjoyed this video, don't forget to hit that subscribe button and turn on notifications so you never miss an update.